All right, what's happening, Rebels? It's been a little while. I've been busy, but today we've got a very important video because this might affect a lot of people in Australia, but it could even be a sign of things to come in Canada as well. The New Zealand housing bubble just collapsed. And, well, some people say Australia's in a bubble. Let's get into this one. This is from Outback Crisis. There's a lot of comments. We'll check them out towards the end. Real quick as well, guys. If location independence and freedom is part of your mission, then we've got a school community for that. Just check it out. Links just below my face here. And yeah, without further ado, let's just jump in.
We are very mindful of the cost of living crisis and the pressure that New Zealanders are under. And that's why you're seeing us cut the wasteful spending and actually bring inflation interest rates down. And finally, the economy's growing again.
We're certainly seeing unemployment rise, and we're seeing particular competition around entry-level roles, which I think reflects that this job market is really hitting people under 35 the hardest.
A few of my cousins are trying to find work at the moment. They reckon it's pretty hard.
House prices continue to stay low. Good news for buyers, not so good for sellers. The latest Real Estate Institute figures show the median house price is now just over $770,000, down 2.4% year on year to the end of February.
Right now, as you are watching this video, New Zealand is experiencing one of the most dramatic housing market collapses in the developed world. House prices have crashed by over 20% in major cities, wiping out hundreds of thousands of dollars in wealth from ordinary families. Construction has collapsed, mortgage stress is exploding, and an entire generation of homeowners is facing financial ruin. But here is what should terrify every Australian property owner. We are following the exact same path that led to New Zealand's housing market disaster. Today I'm going to show you exactly what happened in New Zealand, why their housing market collapsed so dramatically, and how Australia is repeating every single mistake that led to their economic disaster.
Yeah, interesting stuff. Just before we carry on, guys, I see this a lot on Threads. Look, I see a lot of people who have invested in property and they think it is the best form of investment. And sometimes I do tend to agree. But the thing is, a lot of people believe that there's no chance in hell that the value of your property is going to go down because it's only ever gone up over a long period of time. But if you look at some of these markets, Canada and Australia being the two big ones, because I think the US, the housing prices are still affordable, but Canada and Australia, the housing prices are outrageous. You're looking at like 1.2 mil in Sydney for a house at the moment, and somehow people are still buying into these properties. So the Aussies think that this is still a good investment, but basically what this does is it prices out the average Aussie, the new homeowner, prices everyone out. Most of the time, the only people buying these properties are foreigners, and at some point, something has to give because the value of these properties are outrageous. If you guys aren't following me on Threads and Instagram, go and do that because I'm posting about these properties very often, and you'll see like a $4 million house, which is just an absolute shithole, and people are actually buying these things. The market is madness. But yeah, let's just get stuck into it, guys, and see what Outback Crisis have to say.
The shocking collapse numbers. According to the latest data from Catality, New Zealand house prices have fallen 16.3% from their peak. Auckland has crashed by 21.4%, Wellington by 23.9%. The median house price in Auckland was over 1.2 million New Zealand dollars at the peak. A 21.4% crash means the average homeowner has lost over 250,000 New Zealand dollars in equity.
But I think really the key message here is that pretty much everybody's seen a fall in their CV between mid-21 and mid-24, just reflecting the timing when these CVs were taken. You know, if you think back to 2021, that's pretty much the peak. Mid-2024 was pretty much the trough. So I think if anybody's got away with a higher CV, I'd be pretty surprised.
It's ideal really, because New Zealand house prices are way out of whack. They certainly have the potential to fall much more dramatically.
Families who bought at the peak now owe more on their mortgages than their homes are worth. The construction industry has been completely destroyed. Residential building activity has collapsed to levels not seen since the global financial crisis. Here is what makes this collapse even more shocking. It happened despite the Reserve Bank of New Zealand cutting interest rates by 2.25%. Mortgage rates have fallen dramatically, yet house prices continue to fall month after month.
Yeah, because people don't want to invest so much money into a property that is well overvalued. At the beginning, they said the property prices have fallen down to 770k. That's still a lot of money for a house, right? That means if it's dropped 25%, you're looking at houses that are, look, my math is not so good on the spot, but like, what, $1 million or so? If it's dropped by 25% down to 770, almost $1 million or roughly around that. Why does anyone want to invest in a property that's worth $1 million if they're on, you know, an entry-level salary, or if they just like have a normal job, 60, 70, 80k a year? Why would you ever do that? Most of the time, the only way that you can do that is if you partner up with someone. You've got to get married, you've got to get a partner. People invest in these big properties, they take on these huge assets, huge responsibilities with someone that they've only just met. All of a sudden, it just creates problems and drama in your own relationship, all because you took on a massive mortgage. It's no surprise to me, but for some reason, people haven't been able to see this coming.
This proves that when a housing bubble bursts, even massive interest rate cuts cannot stop the collapse.
Of food soars, house prices continue to slide for the 9th month in a row. Prices are down 5.9% on this time last year, while the number of houses sold has slipped 18%.
During the pandemic, New Zealand experienced one of the world's biggest house price explosions, with prices soaring by around 30% in just 2 years. The 2022 Demographia Housing Affordability Survey ranked New Zealand as having one of the world's most expensive housing markets, with a median multiple of 11.2 in 2021. This means the median house price was 11.2 times the median household income. To put that in perspective, a ratio above 5.1 is considered severely unaffordable. New Zealand's politicians implemented every possible policy to inflate the housing bubble.
Funnily enough, guys, 11.1 or 11.2 that it just said isn't even the extreme of what is out there right now in the world. You should see some of these other markets, man. It's just, yeah, 11.2 is actually reasonable relative to some of these other countries that I've been checking out.
They cut interest rates to 0.25% for over 2 years, increased immigration to boost demand, restricted land supply to create artificial scarcity, and pumped billions in stimulus that flowed straight into property prices.
The last time inflation was this high, Madonna was Vogue. These guys were in charge. And you could get a feed of KFC for under $3.
Crazy combos from just $2.95.
Just like in 1990, we're feeling the pinch, which is more like a punch in the guts for some.
We're hearing from teachers who are literally crying down the phone to us and telling us how desperate times are for children and their families. And we've even had reports of some families living in cars, tents, and even a shipping container.
The affordability death spiral. What ultimately destroyed New Zealand's housing market was affordability. At the peak, mortgage repayments consumed around 50% of the median household income. Young families were spending half their entire income just on mortgage payments.
For those showing off homes, it's been a quiet winter.
We have seen a slower rate of properties leaving the portfolio to be sold, and an increasing level of properties coming into the rental market when owners decide that either they haven't achieved the price that they were looking for.
That means more stock on the market as the median house price falls to $800,000.
First home buyer.
800k is still a lot of money to most people, though. Let's be honest, guys. It's not like it's dropped a lot, but the thing is, so many people invest in properties around that $1 million mark, because the value of property has gone up over the last decade or so. So they're investing into $1 million property, hoping that over the next few years it's going to go up maybe 200, 300k. But the thing is, when people invest in these properties, they don't think about what would happen or how their life would be if that property, instead of going up 200 or 300k, would drop 200 or 300k, and the pressure that it would put on them and their family, their home, their relationship. Most people don't even think about it because it's not even part of their reality, because the prices have always gone up over the last 10 years. And this is globally, or at least in the West, that this has happened. And it just baffles me that people don't even look at the risk calculation, man.
Buyers were complete.
I'm not laughing at the people that are losing money on this or that have lost money, but I see debates about this online all the time. And people are so adamant that if you invest in property in Australia, New Zealand, etc., you know, you can't lose, mate. Well, clearly you can, and if you just look at history, you can as well in other parts of the world, you know. So yeah, let's get going.
completely priced out. A generation of young New Zealanders gave up on home ownership because it had become mathematically impossible. When interest rates started rising from emergency lows, thousands of families faced the choice between keeping their homes and paying for basic necessities. This created a vicious cycle. As fewer people could afford to buy, demand fell. As demand fell, prices started dropping. As prices dropped, more homeowners found themselves in negative equity, unable to sell without taking massive losses. The market entered a death spiral that continues today. Australia's identical trajectory. Australia's median multiple has increased from 8.0 in 2021 to 9.7 in 2024, approaching the same level that triggered New Zealand's collapse. Sydney and Melbourne already have median multiples above 10, putting them in the same severely unaffordable category as pre-crash Auckland and Wellington.
Anything in this particular area just keeps going up and up.
I guess it forces you with a feeling of urgency to get in.
We've seen cities like Sydney, Melbourne, Brisbane and Perth up more than 2%, Adelaide almost up 2%.
That's not good news for Nia Pandoulis' dreams of home ownership.
I feel like as someone that's sort of in Sydney, I think the reality is that would get pushed further and further out.
So, congratulations, sir.
Australian house prices have increased by over 20% since the pandemic began. The Reserve Bank of Australia cut interest rates to the same record lows, making borrowing almost free. Our government implemented the same first home buyer schemes, immigration policies and stimulus measures that inflated New Zealand's bubble. Mortgage repayments as a percentage of household income are tracking near their worst levels in history. Young Australians are being priced out of home ownership at record rates. Mortgage stress is exploding as interest rates rise from emergency lows. Australian residential construction is showing the same stress signals as New Zealand before their crash. Construction approvals have been falling for months as builders struggle with rising costs and reduced demand. Major construction companies are going into administration, leaving thousands of homes unfinished.
Anyone planning to build a new home is being urged to tread cautiously as the construction industry battles an insolvency crisis, with more than 2,500 building firms going under in just 2 years. While Australian company failures in general soared almost 23% in March, it's the building industry that is bearing the brunt. Master Builders says skyrocketing inflation, a meteoric rise in the cost of materials, a lack of supplies and a lack of tradies caught companies off guard post-COVID.
It's impacting on builders big and small right across the country, whether in the commercial builders or residential builders, small house builders. So it's the same set of circumstances. They've signed fixed price contracts, they can't deliver on time and at the price, and this is what happens. The bigger builders have got bigger balance sheets so they can sustain the losses for longer, but eventually it stopped.
New South Wales had the most builders go into administration with just over 45%. Now Victoria was next at 27%, with Queensland third, where 15% of construction companies put up the white flag. The remaining states fared pretty well though.
Building material costs have exploded, making new construction uneconomical. Labour costs have soared as skilled tradies leave the industry. Land prices have risen so high that developers struggle to make projects viable. This creates the same vicious cycle that destroyed New Zealand's market. As new supply dries up but prices remain unaffordable, reduced supply cannot compensate for collapsing demand from priced out buyers. The $2.7 trillion debt bomb. Australian households are carrying approximately $2.7 trillion in housing debt, one of the highest levels in the world. When interest rates were at emergency lows during the pandemic, families borrowed massive amounts thinking they could afford the repayments. As rates have risen from near zero to over 4%, millions of households now face mortgage stress they never anticipated. The Reserve Bank's data shows mortgage repayments have increased by over 40% for many borrowers. Distressed sellers are being forced to accept lower prices to escape unaffordable debt. Potential buyers are scared away by the prospect of massive mortgages in a rising rate environment. This is the exact mechanism that drove New Zealand's crash.
I hope we're getting close to the end of it, but it's hard to predict.
Australian governments continue implementing the same policies that guaranteed New Zealand's collapse. Immigration continues at record levels, adding hundreds of thousands who need housing but cannot afford current prices. This creates artificial demand while doing nothing to address affordability.
Yeah, this is the thing. A lot of people argue that the prices of properties are going up and they'll continue to remain stable, at least in Australia, because of the immigration. But that's assuming that the immigrants coming in can actually afford properties. Most of the time they're bringing in immigrants from, you know, countries that aren't going to be producing people of that wealth. Okay, so like what, 120,000 Afghans are coming into Australia. They're definitely not going to be able to afford the property that is available to them, right? Most of them are probably going to be given living situations, living quarters, whatever you want to call it, social housing, just to get by and get going. You know, the thing is with these immigration policies, they're not bringing in people from wealthy countries or with wealthy backgrounds. Yes, some of them might be coming in from a wealthy background. But I mean, like, how many people from Afghanistan are going to be able to afford $1 million property? It's just ridiculous that people even think that immigration is going to be the solution to this.
New figures this week show Australia's population is growing fast, now nudging 27 million, an increase of 660,000 in the year to September, 83% of that from overseas migration, as people move here to work and study.
That their Big Australia policy has seen record numbers of immigrants coming to this country during a housing and rental crisis.
First home buyer schemes pump more borrowed money into an overheated market. These programs do not make housing affordable. They simply allow people to borrow more money to compete for the same limited supply, driving prices higher. Land release remains restricted in major cities, creating artificial scarcity. Most dangerously, Australian politicians treat rising house prices as economic success rather than a warning of impending disaster.
Yeah, and that's literally how I view it. Like, at some point, there's got to be a ceiling to the price of property. You can't go from 1 mil, 2 mil, 3 mil. Everyone's going to get priced out. Who's buying this? Who's buying these properties, man? That's how I view it. So, yeah.
The tale of two recoveries. New Zealand's median multiple has fallen from 11.2 in 2021 to 7.7 in 2024 as a result of the price crash. While painful for existing homeowners, it has made housing more accessible for first home buyers and reduced future financial instability risk. Mortgage affordability in New Zealand has improved dramatically. Repayments as a percentage of household income have fallen from around 50% to just over 35%. Young families can now afford homes without dedicating their entire income to mortgage payments. Meanwhile, Australia's median multiple increased from 8.0 to 9.7 over the same period. We are becoming less affordable while New Zealand becomes more affordable. We are heading toward the same crisis New Zealand has experienced and is now recovering from. The demographic time bomb. Australia faces a demographic challenge that will make our crash more severe than New Zealand's. Our population is aging rapidly, with baby boomers beginning to downsize and sell properties in large numbers. This demographic shift will flood the market with supply just as demand from younger buyers collapses due to affordability constraints. The result will be a perfect storm of increasing supply and falling demand that will accelerate any price correction. New Zealand did not face the same demographic pressures. Their population is younger and more stable, providing some support for housing demand even during the worst price falls. When Australia's housing market crashes, housing represents the largest component of household wealth for most families. A significant price correction will wipe out trillions of dollars in household wealth almost overnight. Consumer spending will collapse as families feel poorer. Retail businesses will fail, unemployment will rise, and the entire economy will enter recession. The banking system will face massive stress as mortgage defaults increase and property values fall below loan amounts. Government revenues will fall as stamp duty collections collapse and income tax receipts decline. At the same time, spending on unemployment benefits will increase, creating budget deficits that will persist for years. The most dangerous aspect is complete denial by our political class. Federal Treasurer Jim Chalmers regularly boasts about strong house price growth as evidence of economic success. State premiers compete to announce new first home buyer schemes. Local councils maintain planning restrictions that limit supply. This political denial means no serious action will be taken until it is too late. Unlike other countries that implemented policies to cool overheated markets, Australia continues adding fuel to the fire. The international money exodus. International property investors are already positioning for Australia's crash. They can see the same warning signs that preceded New Zealand's collapse. Foreign investment in Australian property has been declining as international buyers recognise the unsustainable nature of our market. Credit rating agencies have begun warning about Australia's household debt levels and financial stability risks. International banks are reducing their exposure to Australian property loans and tightening lending criteria. When international capital flees a property market, it accelerates any correction and makes recovery more difficult. Australia is already seeing early signs of this capital flight. The generational wealth destruction.
Well, I think if the property market collapses, you're going to see a lot of international investors go into Australia and snap up properties that are now going to be much cheaper than they are now, right? And I'd imagine there'll be a lot of people out there who are holding off and buying their first home, that are on good money. Maybe they're a nomad somewhere, saving money, lowering their living costs, putting money away for this exact situation to happen. Is that going to mean that it's going to help the economy? Probably not. It's probably just a small percentage of people doing this, but I think there is opportunity in bad times. And you can either be the type of person that will take advantage of those opportunities, or you can be the type of person that gets massively affected by this situation.
The coming crash will represent the largest destruction of generational wealth in Australian history. Families who bought property in the last 5 years will see hundreds of thousands of dollars in equity wiped out overnight. Baby boomers counting on property wealth to fund retirement will find themselves with insufficient resources. Generation X families who leverage themselves for investment properties will face bankruptcy as rental yields fail to cover mortgage payments on devalued assets. Young Australians who finally entered the property market will find themselves trapped in negative equity, owing more than their homes are worth. They will be financially crippled for decades, unable to move, upgrade, or build wealth. The 12-month countdown. Based on New Zealand's experience and Australia's trajectory, our housing market crash is likely to begin within the next 12 to 18 months. Construction activity is declining, mortgage stress is increasing, first home buyer activity is falling as affordability reaches breaking point. The same demographic and economic forces that triggered New Zealand's crash are now operating in Australia. We have reached the point where further price increases are mathematically impossible given current income levels and borrowing capacity. The crash may be triggered.
Mathematically impossible that the value of property is going to go up. That's a very interesting statement and prediction, because a lot of people think that it's going to continue rising.
By rising unemployment, further interest rate increases, a global economic downturn, or simply recognition that current prices are unsustainable. Once it begins, the correction will be swift and severe. The choice Australia refuses to make. Australia faces the same choice New Zealand faced 3 years ago. Accept a controlled correction to restore affordability, or continue inflating the bubble until it collapses catastrophically.
Real interesting video, guys. Yeah, I mean, I've been seeing this for a while, but 10 years ago people were saying that it was overvalued, so who knows, maybe it's going to keep rising. Australia is a very different country to New Zealand. It's a bigger piece of land. There's a lot more immigration coming to Australia. Yeah, I don't know. I'm not an expert specifically on the Australian property market, but the way I look at things is, can you get a deal? You know, so if the value of property in Sydney, for example, the average value of a house is about 1 to 1.3 mil, goes up and down. Can you really see a deal out of that? Like, if you were to purchase that, do you really think the value of that property is going to go up over the next few years significantly enough for it to be worth the risk? The way I see it is that it is not, and that's why I look at emerging markets. You know, Southeast Asia, Latin America, property prices are much lower than anywhere in the West, and because the ceiling is higher, it makes it a much less risky option, a better investment in my eyes, and the yields are a little bit higher as well because you have so much tourism so many foreigners moving from the West into these emerging markets. That's just what I see. I want to be able to get a deal. I don't see the point of putting my wealth into a house at such a high price point where the risk of it going down is, it seems to me to be more likely than it actually going up significantly. Let's check out some of the comments here. I'm sure I'm not the only one that believes this. Median house price 77k, but the seller isn't happy with it. Greed and stupidity drive this economy, nothing else. Greed and stupidity, maybe. I think it's just people investing into one house and being able to borrow more in order to invest in the next one, and it just keeps continuing like that, and people don't see the signs. It needs to crash by 30 to 40%. Homes should not be this expensive. I agree, they shouldn't be this expensive, but a crash 30 to 40% is going to wipe out people's wealth, man. It's going to be really bad. Houses are for living in, not speculation. Consecutive Australian governments have failed to grasp that concept. Or done by design, it's not an accident. Yeah, maybe it's to wipe out the middle class, who knows? The middle class have a lot of their wealth tied up into property. Maybe people will start investing into crypto instead. Bring it on, we all need fairness, not greed. Having a house go down in value and take 3 years to come back to what it was is a correction, not a crash. I survived it in 1990. It was not fun, but it was not the end of the world. Yeah, it won't be the end of the world, but I mean, it will be for some, right? It will definitely be for some. Money ordinary people would not have had anyways. If your house is paid off, it is better if you live in it. If you bought investment properties, not good. Greed has created this rubbish. Once upon a time, a house was a home. Now it is just a house. Yeah, I mean, you should still invest in properties. I don't think there's anything wrong with putting your money into properties, but yeah, you have to make the right decisions. You know, I'm not going to invest $1 million into a property in the hope that it's going to go up 200k over the next 6 years. It doesn't seem worth it to me. I'd rather invest that money into my business to make more money, so I can invest in better deals. Sounds exactly like Canada. Yeah, that's what I said at the beginning of this video. Canada and Australia, very similar markets. You have to wonder why 3 very successful Commonwealth countries are suffering from the same issues. Yeah, I mean, is it a government thing? I don't know. Or by design, people fleeing New Zealand, people flocking to Australia, big difference. Yeah, like I said earlier, you've got massive amounts of immigration coming into Australia, but that immigration doesn't mean that the levels of wealth is high, like to the high standard of being able to purchase a property. Banks still have to issue mortgages. They still have to determine if you are worth, you know, giving the money to. A lot of people won't qualify. Many people from third world countries are the ones immigrating to Australia. Yes, you have some wealth from other nations as well as the third world, but you know, most of them are not earning the type of money that you think. Like I said, the Afghan example, plus a lot of the immigration is students as well. So there has to be a separation, like how many people are actually coming to live permanently, get jobs and stay in the country, how many people are coming for a short period of time, because the students aren't going to be buying properties. You know, so you've only got one type of person that's going to be able to buy these properties. It's people with wealth that are coming from wealthy places already, or if they're coming from the third world, they're probably coming with corrupt money already, right? They've done something bad to get that money. Not all of them, but yeah, that's kind of the way I see it. I own a home in New Zealand and I'm happy to lose on my property because house prices are ridiculous. More young New Zealanders need to be able to buy affordable homes and raise their families. You're happy to lose on your property? I don't know why anyone would be happy to lose on their property. I think this is a troll comment. Doesn't make any sense. I understand, like yeah, you've got empathy for the families. I agree with you, but there's no way anyone would want to lose 200, 300k on their property because they're worried about other families they've never met. 20% fall is not that much because all properties may have grown 100% these last 10 years. Only a problem for recent buyers. Yeah, I actually have to agree with this. If you bought your property 10 years ago, it's probably not going to affect you as much because it's gone up massively. You intend to keep it if you haven't sold it already. If you sold it, then you've exited the market just as a good investment would, like you would with stocks or crypto or something. You sell when you buy low, you sell high. It's people getting in now. Why are you going to be buying a property now at this price? It's just stupid, man. It really is stupid. I know people need houses to live in and stuff, but you don't need to spend all that money on a property. Personally, I would just rent. I would rent somewhere and invest my money into better deals in emerging markets. That's what I would do. Get a residence somewhere else if you need to. Earn money online, location-free income, location-independent income streams, cash flow online, invest a property into better deals. That's really the path that I follow. If you guys agree with that, if that's your mission as well, check out the community just below my face here. It's all about helping people make location independent income, cash flow income streams online so that you can go anywhere you choose. live in countries with a lower living cost, invest in properties that aren't well overpriced, that do have a much higher ceiling and are not likely to go down anytime soon because of certain indicators. That's what we do in this community. So yeah, check it out. Don't forget to like and subscribe to this video, guys. And let me know in the comments below, what do you think about everything that's been discussed here? Are you on the same level as me? Do you think the same? Have you got a different opinion? I'd love to hear your opinions. And as always, guys, I'll see you in the next one.